Okay, awesome. Oh, how's your weekend been?
It's been good. I played a lot of tennis yesterday. I was exhausted. I was supposed to play this morning, and thank God it rained because I was ready to go to hospital. Forget about play again, you know? I'm just like exhausting myself here.
Yeah, well, isn't every
So
day like that? Because the weather is just always good.
it's 75 degrees here every day.
Yeah.
But now it's raining, and it's just such a great respite.
Oh, I bet. Yeah, yeah. I know the feeling. Rains here every day.
I can just stay inside and eat.
Well, there you go. You just summed up my life. Stay inside on Friday afternoon. Katie said, "Oh, I really feel like an ale." I said, "Well, let's pack up for the day and go get out lunch and have some ales."
All right, I see some people are packing in here. Hey, everybody.
Oh, good, 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 good. Anish, Sergey, Don, Brad, Trent, Zafar, Liz, Naveed. Hey guys, nice to see you again. I've been catching up on the replays um, every day, trying to see what's been going on. I haven't been able to make every single one of them. Yeah, Trent. Trent always mentions that I'm going. He always makes me feel bad for not going. Thanks, Trent. Yeah, so hopefully you guys had a good weekend. It's the end of the month, isn't it? So this is it. This is the last of January. Winter's almost over. You know, in England, it's about to be summer. You know, end of May when the sun comes out.
Do you guys know when winter ends and summer begins? Isn't it always the same there?
Yeah, no. Winter ends on about May, and then autumn begins on May 5th.
Yeah, exactly.
Actually, it's been hot and humid because the houses are just designed to insulate. So you just get this like little hot box because people refuse to have air conditioning in England for some reason. I don't know why. Because
Yeah, for the 2 days you may need it.
yeah, yeah, yeah. Well, I tell you what, it gets roasty there in Wimbledon in the middle of summer. Then on some of those centre courts when you watch tennis.
Right.
I know you're a fan of doing that. You know, if you, I don't know if you go to watch tennis much, but if you can sit in that thing and there's no wind, geez,
Oh,
even
I know.
70 degrees feels like an oven.
No, I go to Indian Wells, which is in the desert. It's a Palm Springs area, and they have like what's called the Fifth Slam. They have a very, very big tournament, usually middle, end of March, and I take my son there to watch the finals. And we're sitting in this, cement stadium, and even in
Oh,
March now, it's like 90 degrees. But with that sun baking
oh,
on you, it is 120. And we're talking about March, so
yeah,
it's
yeah,
amazing. So anyhow, I think we're 2 after the hour. Maybe we'll wait another minute or so. Um, this is the last session. Want to thank you guys for being so committed. Really, I've enjoyed it. It's helped me in my own thought process. It's whatnot. So it's been very enjoyable for me. I hope it's been the same for you, and you've taken away a lot from this. Peter, maybe you wanted to say a word or two,
yeah,
because
absolutely, yeah,
this is the last session of this kind, and we'll have to think if we're going to do this in the future, because I enjoyed it.
yeah, yeah, absolutely, guys. Thank you so much for joining this program. This was a big experiment for us because I don't know if you remember the very first time that we came on 2 weeks ago, Monday 2 weeks ago, and I said to you guys that I talk to Mark every single day because I help him set things up and help create the website and all the things that he needs to make sure the pattern trader runs smoothly, and um, and so I see how he does things every single day, and just when it comes to the trade execution, things are always a little different. And so this was designed to give you that edge to see exactly what goes through a professional trader's mind around the trade execution, that crucial time when you decide which trade to take and which trade not to take. Now, what we didn't expect and what's been really great in these 2 weeks is that it's been such a tough trading environment. So you can see how to cope with it, the decisions to make, and how important the risk management is. and what happens during a period like this, which does happen quite often. You know, these difficult trading periods, they do happen, they do spike. And hopefully you guys can see, I don't know if you guys have the trade journal for January yet. We're going to post it up in the webinar so you can look at all of the trades that were taken in January, so you don't have to go back in your emails, but you can get just an overview of how this entire thing develops. And over a 2-week span is enough time for you guys to see the development of the chart and see how things develop. Like this USD yen chart, you guys have now seen it every single day for 2 weeks, for 10 trading days. You can see how different things are. And hopefully this is really, really expedited your way of thinking. And I know some people are coming out with some really great stuff like Safar and Dex, and people going into the Facebook group, and the quality of the discussions you guys are putting up there. I really feel that you guys are a cut above the rest now, just because of your sheer commitment to these sessions. And if you couldn't make every single session, you watch the replays. So it's been an absolutely amazing experience for me to go through everything. Of course, I couldn't make every single session, but if you do feel like you are about 10 steps ahead of where you were before the 2 weeks, just put a yes in the comment box and just say, yes, I'm 10 steps ahead, because I feel like, you know, I've learned a hell of a lot, even though I get exposed to this more than a lot of people. And I really appreciate what you've done here, Mark. I know it's a lot of work. You didn't have to do it. It was an experiment, because usually he just likes playing tennis every day. So it's been absolutely wonderful. Thank you. So how about we just go ahead and
Sure.
get started?
So yeah, I know, you know, I drive Peter nuts because, you know, I just have a very difficult time, you know, I guess condensing what, you know, I'd like to say in a short period of time. And I thought, hey, when we started this thing, you know, typically it takes me, I don't know, 10, 15 minutes to assess 30 different instruments. I go through in my mind, I can eliminate things very quickly based on what I look at. And I thought I'd just, you know, walk through that, you know, eliminate it, and then explain why I'm doing things. And every day it's, you know, worked out to be an hour and a half. So I thought it would be kind of 20 minutes every day, and it's an hour and a half. And so, yeah, it has been more work, but it's, you know, been enjoyable and instructive, and hopefully you've gained a lot out of it. So, you know, everyone says, yes, they're, you know, learning, and that it's been a good thing. So thanks for that. So, you know, just building on, you know, what Peter said, you know, the reality of trading is that, you know, the markets, you know, go sideways for most of the time. They, you know, do these, you know, for months. They do this. I mean, this is a weekly chart, so this is months and months and months of just doing nothing. And then, you know, in 5 days you'll do this, and another 5 days you'll do that. And if you weren't there, then, you know, now you're back in months and months of churn. And that's really the reality of trading. So it requires an enormous discipline, enormous patience, you know, and I think this is what, you know, people miss, that, you know, whatever your trading style, the opportunities are few and far between, and you just have to be very patient, and you know, make the ring bell, you know, ring the bell on the ones that you know, you really win, and then really contain the losers. And I think I've always said, and I've been pretty consistent in my webinars and all my communications with all you guys, that I'm looking for 2 or 3 trades a month that should overcome all the inevitable losers. And then you just saw just so many losers at the end of the month. But you know, and I'll take you through the trade by trade results, you know, at the end of for January, and it was still very fertile. I mean, you know, maybe let's just reference that real quick. So I've, you know, prepared this PDF, which you'll see in the members, you know, area, and since you guys are, you know, members, you'll be able to access. So these are all the trades, you know, for you know, January, you know, the good, the bad, and the ugly. And then I've also included, you know, trade by trade. Let me just reduce this so we can kind of see it, and then I'll enhance it again. So this is a trade by trade, and I'll blow it up in a minute. I just wanted to show you it in one shot. So, you know, we started right out of the box, you know, 4 great trades. So as I said, I'm always looking for 2, 3 trades, and I never know when they're going to come, the middle of the month, the beginning, the end. But, you know, the bigger trades, you know, the trading strategy is designed to find big wins, identify, trades that, have expanded, risk to reward, where we can get 4, 5, 10 to 1 risk versus reward. And those trades should hopefully compensate for all the inevitable losers that'll come along the way, the broker spread and things of that nature. So, in the first, right out of the box, first 4 days, we had 149, 265. So what is that? 400, then another 150 here. So almost like 600 pips right in the first 4 trades, and maybe should have just stopped trading right then and there. And that's, my style, and this is basically what happened. And so you can see the good, the bad, and the ugly. We had a 300 pip, gain in the Euro New Zealand here. We had another 200 pip gain in, gold. We had another 265 in gold in the earlier part of the month. For some reason, I always do very well in gold, and it's worked out this way too, where we made 465 pips in gold alone this month. So, and then the last, third of the month was just horrible. About 8 out of 10 trades losers. 1 was break even. So, just horrible trades to end the month, but still ended 653 in the black for the month, notwithstanding the good. And I think when I look at the win-loss, there were 29 trades, and we had 13 winners and 16 losers, which means that I only had a 44.8% win-to-loss ratio, but ended up bagging 653 pips. And again, a lot of these trades, in the odd versus Japanese yen, for instance, I did send out a video 2 hours before the Fed meeting, say when the actual odd yen was trading at about 84.15 at the time. And I said it'd be a good idea to take, partial profits here. So these, pip counts actually reflect the worst case scenario. In a lot of these trades, I said, try and get out at a better place, and hopefully you did. So frankly, if you were trading my style, you probably could have bagged even much more than this. So again, I think, at the beginning of the month, if I would have said, hey, would you take 653 pips no matter how we got there? I think, it would have been a resounding yes. And I think this is emblematic of, my trading strategy, what my objectives are. But it's not for everybody. You do have to endure periods like this, where the last third of the month we lost, enormous amount of pips. And unfortunately, if you came in January 20, you're now looking at a loss, which hopefully will make up in, February very quickly. And I think I see one trade right now that I'll share with you that I'm excited about again, and we've talked a lot about it, that I think we'll get right back in the black and get back on our card, our horse again. So again, this is, trading. No matter what your style, your strategy, you're going to endure periods of, frustration where it doesn't work. But I think, again, I don't want to pat myself on the back or whatever, but I think whatever your trading style is, whether you follow me or whatever else you want to go on to, that I think you can kind of quickly see that you need to have a strategy that you have a better risk to reward on your average trade, that you need to have, an objective of at least 1.5 to 2 to 1 risk to reward, on your average trade, which will compensate for all the inevitable losers. Math will show you that if you have an average 3 to 1 risk reward, you could actually lose 72% of your trades. And again, we're winding this up. I think just to contrast, most people have, a strategy where they're looking at smaller time frames. So they're looking at, smaller take profits, 15, 20, 25 pips. And they have to risk 20 to 25 pips to get that, overcome the spread. And so you need to be 80% correct to be, profitable over time. And, the last quarter, usually, historically, I'm about 55, 58% win-loss. And, in the last quarter, I've been less than 50%, but still widely profitable, because the, the average, take profit objective is much higher than 1 to 1. So this is how it ended up for January. And if you have any questions, just let me know on that. Blow that up just a little bit. I don't know if you can see it very well. These are the trades again, one by one, where we were, successful on some and not successful on others. And the others, we, had small, pip counts. And then again, I'm looking for 3 trades a month where I can get 300 to 500 pips on a trade. And we did that, 2 or 3 times this month, and that's what overcame all the, inevitable losses that came our way, and in this swing
Yeah,
toward the
Mark,
end of.
if you send that to me afterwards, I'll stick it in the members area. People can download the PDF.
Yeah, no problem. So yeah, so this is all the trades, and it goes through everything that you've seen in your daily emails. So let's get back to what's going on now and whatnot. So we've been talking extensively about some of the confusion I felt in the Japanese yen. I felt that it was going to be an important trade for a number of reasons. There are a lot of cross pairs with the yen, so it works out, the yen it works out to be a very important currency pair. So in this case, we're looking at the dollar versus Japanese yen. This is a weekly chart. And we've talked a lot about before I sent out my email on Thursday, I went back and forth and back and forth. At one point I was going to send out a long pound yen trade, then I was looking at the dollar yen, and I was going back and forth, and I was trying to make sense, because we've talked, my conflict has been within this pattern. I saw the double top. I put out an article, which is on our website, predicting that the dollar yen would drop by at least 500 pips from here because of this double top, and indeed it did. And it fulfilled that objective, and I thought it might even go further. And then we looked at an even more foreboding pattern that could potentially be in place. But again, these patterns don't mean anything until they're confirmed. Sometimes I'm a little early, and we take some pips out at the top, like up here. I might be a little early, but I see what's going on, and I get in, and we make the thrust. And again, sometimes I'm going to be wrong by being early, but over the course of time, it's worked out pretty well for me. So last week we hit the neckline right here at 116, and as I've said, the market always points in the direction it wants to go in. And so the conflict was, now you have this massive key reversal at or near this neckline. And now I didn't know how this would behave, because, you also had this massive key reversal here, and, a couple weeks later, it did roll over. So I was wondering, if we weren't going to do the same thing, that we were, looking at a potentially ominous technical formation. And I typically let the pattern rule, but I also look at price action. So it's not, I don't look at these patterns in a vacuum. I look at the price action, then I like the market to confirm what I'm looking at. And so again, I was very conflicted last week by this key reversal in this long building pattern that typically would indicate that this was a bear pattern. But these patterns are not set in stone, and they do go, they don't always go corresponding to the way it's looking. And in this case, it really technically, no pun intended, was never actually confirmed. The confirm would have been the breach of this neckline, which it actually never did. It came to the support and held, and then this was telling me where the market wanted to go. But I was just confused, because I didn't know if this pattern would end up ruling, and this thing would end up rolling like it did here on this reversal here. So, in the end, on Thursday night, the Bank of Japan came in and did a rate cut, where now they've gone to negative interest rates in Japan because of the ongoing deflation and recession there. And they didn't even alert the US Federal Reserve. It was such a shock to the market. Nobody knew it was coming, not even the Federal Reserve. And like I said, it's like you can always look at these events in a vacuum, but to me, the market always points in the direction it wants to go, well ahead of the event. And frankly, the week earlier, by virtue of this key reversal, it was already projecting that there was some strength looking to come into the dollar versus yen for whatever reason, and it was well ahead of the outcome. So I never like to use an excuse, oh, the Bank of Japan surprised everyone, and so I didn't know what to do. The market was telling me, I just didn't know how to listen to it, frankly. And now we're kind of still in the middle of this thing. Does it roll over? Does it go up? Frankly, the way this is looking and the strength of this, this is not looking like this pattern should be acting. So in which case we may get what I call a busted pattern, where if we go to 125 and then beyond, now we would violate what ordinarily would look like a bearish pattern. And to me, that informs me of something also. If a pattern doesn't behave the way it should, then that gives me a corresponding way to look at the market and attack the market. And frankly, you know, if it goes the other way, it's going to go the other way in a hurry, and to me represents a terrific opportunity. So I'm going to be monitoring this. Again, it still causes a little conflict here. You know, is it, you know, because we're kind of in the middle of the tennis court, if you will, where we didn't bust the high, we didn't bust the low. So, you know, you've got the top of the trading range about 126, the bottom at 116. So you've got a huge 10-point range that this could, you know, that this has been playing around in. And again, this is the difficulty of the markets. You know, within the construct of these formations, I do make plays based on the price action. But I typically make up my mind which is the prevailing direction, you know, that is, you know, given by the pattern. But then if the pattern starts, you know, operating in a different way, then, you know, we have to look at it that way. So the yen right now looks like it's certainly going to go weaker again. And it's just a difficult market because you have a lot of intervention. You know, here in December, the Bank of Japan came in and did an intervention, a $10 trillion thing, and sent the market the other way. So, you know, you can be rated by the Bank of Japan quite a lot. There's a lot of intervention in this currency, and so it makes it a bit of a risky affair. But again, to me, the market typically points in the way it wants to go. In this case, you had a reversal down, in which case you could have followed it, you know, 400 or 500 pips that way, and now a reversal up, in which case you could have 1,000 pip move the other way. So, you know, the market does point, you know, primarily in the direction it wants to go, and sometimes it's not easy. In this case, it was pointing higher, but it just took a little way for it to resolve higher. But it was, this bar was, you know, telling you where it primarily wanted to go. So these bars do mean something, even though, you know, it didn't follow through immediately. The size of this reversal was such that it you know, did indicate that that was the next direction it was going in. And you see one here and one here, and so they put themselves as strategic things, but you might have to endure all this before, you know, it resolves itself. So again, you just have to look at these things. You know, when you see something like this, you know, it did say that, hey, for now this has ended. But then, you know, they'll put on another one, and then you may have to observe another different direction. So I don't like to just, you know, lock myself into, you know, one way or another. To me, I wait for, you know, the price action to tell me where it wants to go. And typically when you get a big range day with a close in one direction or another, that usually will alert you, hey, you know, you need to be attentive that this is pointing, you know, in the intended direction. And it just may take a little longer, and, you know, give you some fits and starts and try and shake you out. But you know, these things typically mean something, and obviously last week this meant something, and I you know, just was confused by the overall pattern and made the wrong decision in the end. So my order at 118.40 sell stop never got triggered on my broker platform. I went into the Facebook page and asked everyone if their sell stop at 118.40 got triggered, and, you know, nobody's did. So, you know, depending on your broker, the market went slightly below that to 118.37, it looked like, but because this was an intervention, I don't think that the brokers actually filled those orders down there. So fortunately, my resting orders were not filled down there. I actually didn't include it in the total for the P&L for last month, only because it was confirmed to me that, you know, most other traders did not get, you know, confirmed down there. So unfortunately, if you got triggered, you might be in a minority of people who got that trade, in which case, you know, I messed up. You know, that was short dollar yen on Thursday night. So that's kind of, you know, my thoughts on the yen. You know, we'll have to look at things, you know, going forward. It looks like for now that these yen trades, you know, have to be looked at, you know, that they're going higher. You know, I put a sell stop under this low, and you can see the price action on this chart never confirmed that we even went down there. So the price might have, you know, kind of looked like it got triggered on some platforms, but it never actually got down there. This one actually looks like it's around 118.50. The sell stop was under this low, and you can see on this price we never even got there. So hopefully you never got filled on that you know, that order. So I'm assuming you didn't, and I assumed that in, you know, my P&L for the month. So it looks like this whole thing has been turned around, and now we're back in the chop, and we'll have to see if we maybe get another 400 or 500 pip move this week that takes us straight up here. And, into the 130 area, which I now think it's very possible we could see the dollar yen go. Dollar is, at a 13-month high here, finished very strong for the week. And I think it's on a 13-month high. We had a key reversal into new highs on the dollar index. So, the dollar is going from strength to strength on the fact that all the central banks around the world, we have negative interest rates in the EU now, negative interest rates now in Japan. China's cutting rates. Everyone's cutting rates, and the Federal Reserve is, now in an even keel. I think the Federal Reserve now has been boxed in. I think it was anticipated that they may do up to 4 rate, hikes this year. And people were thinking 2 rate hikes, and based on what I'm seeing, I don't think we see another rate hike for 2016. I just don't think they can. Everyone's gone negative, and so I don't think they need to. And the dollar will still stay relatively stronger because, we're got an increasing slope in our interest rates, and everyone's got a decreasing. So that looks like it's going to keep the dollar strong for quite some time. I think we're just halfway through this trend based on major currency cycles. So the dollar looks like it's going to go from strength to strength. We have this outside key reversal on a weekly chart in the dollar index. So looks like the dollar is probably going to go stronger, immediately. And if we look at the euro, we've been looking at this boxed in action for quite some time. Been in this trading range. We closed toward the end. We have this key reversal in the middle to see if we can support here. So, we could still get some more chop where it looks like it's, trading down, and it looked like it, here, only to find support and then turn back up. So a lot of chop and churn, and that's what's made the last half of January so difficult. We've been getting a lot of churn and a lot of big ranges. Difficult to assess risk, difficult to assess direction. And the whole premise of this, intensive thing was, how to find the best probability trades, on the upside, but also, in terms of the risk. So let's just go one by one, take a look at some of these markets, Australia and Canada. We talked about this double top. We've talked about this bar that's containing things. So it looks like we've certainly hit a pocket of resistance. We've got this descending wedge now in the Australia, Canada. Descending wedge is one of my favorite bear patterns. It's not easy because sometimes you get some of these, false looks, but again, we have to just be attendant to what the market's telling us here. And now we're kind of getting, one of these things. So, is it, one of these things? And the more, we have a lot of white space to fill, even if this is a descending wedge. So we'll have to see how this plays out. This is an inside day bar in a descending pattern. And ordinarily, I'd like, maybe take a shot at this, but, you've got this price action to the left pretty closely. As you know, I like to see, a little bit of a coil against, a thing to then fall down against. And when you get the energy building at the lower end, it looks like it just could be choppy here. And, you've got this bar that's certainly containing the action for now. We're not going to just fall through this immediately, or maybe we will. I've been surprised this week at some of the thrusts we've seen. So I think that it looks like we've, run out of steam in this market, and I'm looking at the short side of this, but I'll put that on the back burner for now. Australia, Swiss franc, this looks strong. Identified this kind of inverted head and shoulders. We're right at the neckline here. So this market looks, very strong to me. I kind of like the Australian dollar on the weekly. I think we found some support, although we turned down on Friday. And again, so many mixed messages here, so much chop, so many big things, big ranges. So, it's created some internal discomfort in me as to, the environment we're in, and, some of the trades. So, we'll keep whittling it down. I was a little frustrated. I did identify this key reversal bar, and I thought the odd Swiss would, turn around here and go up, so much so that I put in 2 orders, on Tuesday before the Fed meeting, and we got filled on both, and we were looking great at 84.15. Then the Fed came in, and, the market sold off, and I got a little bit jumpy and advised you to jump out. And of course, it's now continued up, and it's been frustrating because I had a sense that this thing would turn around. We have this inverted head and shoulders. Here's the left shoulder, the head, the right shoulder with this key reversal in here, the neckline right here. We bust above here, we retraced, which is very normal. And again, I shouldn't have gotten you guys out until it maybe reversed all the way through this. But I was kind of more in the mode of protecting profits, and since we did have a double position, I was really afraid that if we did reverse, now we give back all this and then we're on a loss on 2 positions. And that was somewhat of my mindset there. So I just wanted to protect you guys, and we did lock in some good profits. So, this one did get away from us, and it could go a lot higher, which is frustrating. But, if this thing has turned around, there'll be a lot of opportunity on the upside to get in this, and hopefully we'll make up for it and make a lot of money, on the turn one way or another. But right now it's a little bit difficult to assess where we are. I mean, we could just get another 400 pips, straight up here, or more likely we could get a move up and then fall back and hopefully digest a little bit of this thing, maybe get an inside day bar, get something where we can get a foothold, and then try and take this the other way, because I do think I see some support in the Australian currency. It weakened a little bit against the Australian New Zealand yen. On the monthly, we shared this. I think that I could still make a case for this kind of going down, but we're still thrashing around, in this descending fashion, and may still need to do so for some time, since these are longer term time frames. I do think the Australian dollar, New Zealand, will turn down at some point and come under this. So maybe that should make us look more favorably at at New Zealand on the upside here. So daily chart didn't quite reverse, and I still kind of like the Australian dollar long here, just because I really like the weekly chart. I think the weekly looks like we've kind of got this ascending wedge, and it looks like we need to go to 74 on this. So again, you see the dollar going higher, and everything should follow, but the Australian has been kind of the stronger one, and I see this kind of support here, and I get a sense that we're going to follow through on the upside on the Australian pair, and there could be a nice opportunity here going forward. So I'm going to keep an eye out there. I don't really see a signal per se on this thing, but it just, something tells me that, I need to be long this currency pair. And there's not a conventional signal, not a key reversal or an inside day bar here. But on the other hand, if I try and visualize this thing going down here, I can't quite make that case. So I could, kind of see that, maybe I just need to have the discipline, wait to see, today's action, maybe put an inside day bar here, and we can get a hold of this thing and take it on the way up, because I have a feeling this thing is turned, and we could go all the way up to 74 or higher on this for some reason, based on what I'm looking at on the weekly. I just get that sense, and if I look at the different picture of the Australian on a different chart, and sometimes I just like to see how it looks on different charts, I just like this weekly. I just see this as kind of a reverse descending, reverse wedge triangle, if you will. And I just see that we need to kind of make another attempt at the 74 area again. So I'm kind of, somewhat bullish on Australian, and I was last week. And again, I let us get shaken out here, and then it continued on its merry way higher. And this key reversal bar was pointing in the direction it wanted to go. The size of it, and the way it closed, suggested that we'd seen the downside in this for some time, and that was the case. And I let myself be prematurely shaken out, just because we had so many positions locked into the Australian currency pair that if I was wrong, we were going to take a big hit there. And so I let that all impact my decision. But looking at this thing objectively, shouldn't have been shaken out of that. And again, my sense is we could be on our merry way back to 74 somehow in this currency pair, which, if we look at the euro, looks weak, and the Australian looks strong. So the euro, USD should go lower in my mind. And we'll get to that in a minute. Canadian yen, all these yen pairs, of course, are just, did a V bottom here and turned, much more quickly than I would have anticipated. And now we might get hopefully a little consolidation, at these levels, and then, get to, you know, take this up if this thing really has turned, which it kind of looks like it has. Just hard to assess the risk reward right now. Again, the Swiss franc, you know, all these bottoms told me that we were at a bottom here. Certainly on the euro yen, we looked at that. We saw all the bottoms, and this was certainly alerting us to a turn here. You know, initially here and then here, I thought we had a bottom. It went a little lower, then put on a big thing, put another reversal here. So this whole thing was telling me that for the moment that the downside was contained. And indeed, it you know, turned out to be the case. And now it's just a question of how we play these yen pairs going forward. Euro yen, again, the euro looks weak, the Australian looks strong. I identified this, you know, head and shoulders. Again, we had these massive key reversals, which were pointing in the direction this market was likely to take. You know, we have this key reversal, one here, two here, all at the top. We have this head and shoulders pattern. So we have the pattern and the price action all telling us that this market looked heavy. I wanted to get short last week. I was looking for something that I could. So we have this pattern. So we have the head and shoulders there, and then we have, you know, all this price action suggesting that we have a reversal here. We have one here, and these are big turns with, you know, massive ranges where you made a thrust higher and then closed all on the low part of the range, you know, and then Friday we crashed through the neckline here. The problem was I really didn't have my traditional, once it, you know, made this key reversal here, I didn't have kind of a traditional way to get in. I mean, I should have got in right here underneath this, but then we had all this thrashing around the next 2 days. And then, you know, Friday we, you know, had this nondescript type of bar, made a new high, closed, you know, and then closed right in the middle, and then it just continued lower and then closed under the neckline. So I don't really like to chase markets. We saw in a couple instances last week where it looked good and then it just reversed. We've got some of this price action. So I'm going to bide my time here and wait for an opportunity where, you know, I can have a better risk reward on my trade. These trades, these markets are so funky right now. You can see this has just gone all over the place. And my sense is we're going to go lower, but I'm just going to wait for a better opportunity. But at least I'm alerted to what I think is going to be the next major direction. So if we get a move up here and then whatever, we could open the way and put, you know, head and shoulders, and, you know, we'll certainly be attuned to this pair going forward. And I think it's going to kind of continue down, but you know, nothing about this pair has been easy. So we'll just wait for our opportunity in the euro versus the Australian dollar. Euro CAD, same thing. I talked that I thought even up here we were going to come all the way down here and form this, you know, head and shoulders, which we've now done. And the euro certainly looks heavy against all these other pairs. So as the dollar index goes higher, the euro looks like it's going to be one of the big ones to get hurt. So we've got this now head and shoulders again. I didn't get, you know, we had this key reversal here, but then we had, you know, an inside day bar here, and then we had a, you know, a false breakdown to the bottom, and then the thrust back up. So nothing about these markets has been, you know, easy, and that's why we have to keep, you know, being disciplined and wait for, you know, where we can, you know, identify something that's more consistent or comfortable within, you know, very complex and volatile market environment. So, you know, we have really the neckline of this head and shoulders all the way down here. So who knows? We could get another quick thrust here, and some support up here, and then a rollover and into some of there. So again, I think I have an idea of the way these things are going to play out, and now I'm just looking for, you know, opportunities where we can get in, where we can understand both the, you know, reward and the risk. But here it could make a new low, you know, then thrash back up here, stop us out, and then go back down and do all kinds of nonsense here on its way down. And it's just frustrating to see these things if they do continue down. I do think this is, you know, this top has been put in. I want to be a part of it, but I'm looking again for a place where I can get in that I can better understand my risk in some of these opportunities. Euro Swiss, I think we had a big, again, I wanted to get, this was going up, and now we have this huge key reversal. And the bigger the bar, the more attentive we have to be to the implications of that. And certainly, I think this has put a limit on any upside in this for quite some time. And now it's just a question of how this plays out. I don't like to just run in right away. You don't just go, straight down against, something that's kind of gone straight up. So this is going to require, some thrashing around, some building away from the thing to see if we, this is going to go down, or maybe it just thrashes around sideways to then turn back up. But nothing that I'm interested in doing in the Euro Swiss for right now. Euro Pound, again, I think we, had this short-term top up here. It looks pretty heavy on the weekly and dailies here. We had this reversal on the weekly, and we're consolidating that, building away now. We've got this inside day bar on a weekly basis, and more room to breathe if it looks like we're going to turn back under this neckline at 75 and kind of retest this, which it kind of looks like we're going to do. So the euro looks like it's going to go down against the pound, and it's just kind of, again, not easy in here. I think I'll wait for it to just keep thrashing around. We've kind of got this triangle going on here, and we'll just might make another attempt into this white space up here. So it's kind of in the middle of the tennis court right now for me, and I think it will turn down, but I can't really assess my, my risk reward really well there. So I'm going to stay out of that. And this has been the frustration. I saw this double bottom down here, these sizable key reversals, try to actually get long, here, got stopped out, and then had another opportunity where this bar was telling me that this was a great place to get in, outside reversal, and I just decided not to play in this, chop, and paid the price, because I thought that, based on this channel, we identified that, we established a low, and we were certainly going to make our way to the top of this, resistance at 132, and 132 was really my objective short term, and we hit that, and now we kind of bounced off that, and we'll have to see, do we kind of return back into this descending channel, or do we start turning this boat around? But even if we do, I think we've got to, do some work before we completely turn it around. So I'll be, this to me suggests that the bottom's been put in. We need to start looking at the long side of these yen pairs. But, again, just don't know how to assess the risk reward right now. And actually, this could be a good place to get in, just for the short term. I think you could have a good couple hundred pips, right around here. So maybe a buy limit today wouldn't be a bad idea, where we try and buy if it comes off a little bit, on the assumption that we're going to see it kind of attack some part of this upside at some point. So I'll look at that. I mean, again, my bias now, this double bottom alerts me that we have a bottom in here, and probably should look to get a foothold, long this trade. Euro New Zealand, kind of a mess also. We have this key reversal turning us down. We have a double bottom underpinning this, and we're kind of in the middle. So I'm just going to let this thing thrash around on its own, and nothing that I really see that I want to do in the near term in Euro New Zealand. Euro US, we talked about GBP odd. I always thought this thing was, in a downtrend. I, identified these key reversal bars as pointing the way down, and wanted to get short, but again, there was nothing in here, that gave me an inclination. It's a great risk reward, and it's just continued on its way down. So this is a funky pair, and you have to be pretty opportunistic on how you get in, because it does raids one way or another. We actually took a long trade right here in the middle of the month, and did pretty well on take profit, a couple hundred points higher there. GBP CAD, this is put in a top, and it's continued down, and it looks further down, and we'll have to be looking at things, but we have some support right here. So I don't think this is just going to be a clean shot through here. I do expect maybe to get some traction in here. We do have a triple top up here now. So maybe the top has been put in. And now we have, some support. So just like the dollar yen, where we saw this major pattern, but we saw the underlying support, really being a way to hold these patterns. So I suspect, we're going to see some support in the GBP CAD, even if it does continue down. So I'm going to be looking at the price action, and will alert you, one way or another there. But it does look like certainly a top has been put in for the moment in GBP CAD. GBP Swiss, again, this thing looks like it's in the process of turning around. I think that it would probably have to come down and do a little bit more work to then turn this thing up. So, right now it's kind of in the middle, and nothing that I really want to do there. Pound yen, kind of all the same story. The yen trades, looks like it's put in a bottom, and we'll have to see how this plays out, and we'll look for an area to, it's got, if this is a bottom, it's got a lot of room to make up just to get down to the breakout area around the 181, about $9,000 higher here. So I think we have to look at any kind of sell-off as an opportunity to maybe get long here. So maybe a buy limit into today's trades may be a good idea. Try and catch it 20, 30 pips lower, on the premise that it's not going to go all the way down here. It's a bit more of a speculative trade, but I think it may be worthwhile. So I'll let you make up your mind if I send it through what kind of risk you want to put on there. Pound New Zealand looks weak to me. I always said the quality of these bars down here, the fact that they both close on the low, suggests that this low will be attacked again, and I certainly feel that way. It's just we've got a lot of noise going on here. Every down move has been moving upward thrust, but my sense is we're going to keep trying to break lower in the pound versus New Zealand, which suggests that the New Zealand is probably going to go stronger. And certainly when we look at the Australian New Zealand monthly, I suspect we may get some strength in New Zealand into this week. And relative to the pound, I think that this thing continues down and probably makes new lows. So may want to get short, on any kind of small thrust up here. I don't think there's much risk on the upside. I think this will open up a path to go down in the pound New Zealand. Pound US, kind of a mess down here. I thought there would be some near-term support here, but that it would have to do some work to turn this around, and that's exactly what we saw. We had a thrust into this area. Now it's kind of gone back, and so we'll just have to stand on the sidelines and see how this plays out. Nothing I really want to do there for the moment. We'll leave the stock indexes out for a minute and come back later. New Zealand, Canadian, here we go. This looks like something that's pretty interesting. So we identified several opportunities, in the New Zealand Canadian last week. Again, just like Australian Canadian, this looks like this uptrend. It started to look tired, and this was the first key reversal, and it followed through. This was the second. And when I saw this thing break through here, I said, I just don't want to play here. And we got this key reversal, but now we get an outside key reversal down. And this tells me that we may want to play in this one. We could get some thrashing around. Again, these markets are pretty volatile, where we go down and then go back up. Just a reminder on Sunday's session, even when I send through the signals tonight to put a sell stop here, I would wait the first 3 hours. And I'll put this in my outgoing emails from now on, but just as a reminder, what I don't want to see is the market just open lower and just go right through, if I put a stop sell, so then it kind of starts at unchanged and then goes lower, because when you have this size bar, you always feel like you're going to get back somewhere in this range. And what ideally I'd like to see, and you may want to wait even to see this, I would prefer, ironically, for the market to start higher, and then if I'm right, to go lower and then trigger my stop loss. I don't want to see my stop just triggered right away. It may look exciting and then we get some follow through, but rarely does it just go from here to here without kind of going into the the other bar just by a little bit. So so Don says, do you change the trade parameters between sending the email to us and the later opening time? I don't know what that means, but what I suggest is whatever parameters I send, like the sell stop, just hold off until about 8 p.m. Eastern time before you put your orders in. And now, you could miss it. You could see, okay, the sell stop, was at this price, and the market opens, it goes through there, and now it's 50 lower, and you're saying, well, I could have taken that trade. And it's just with Sunday trading, you get so many head fakes that I think just as a discipline, and we may miss some opportunities along the way where my sell stop was good, the market hit it, and then it just keeps going through and you could have made a lot of money. But, my experience is that Sunday is messy. You get a lot of false moves and breakouts, and, my experience is, some have not been, good. And so what I would say in the main, it opens at what, 2 p.m. Or 5 p.m. Eastern time, or 5:30. I would wait till, it's actually, there's a separate section that starts 3 hours later. And I would put your your signals in after that, after like 8 p.m. Eastern time. And if for some of those who are not in friendly time zones, I don't know what to tell you. I just don't want to see the market kind of open, go lower, trigger us in, and even if we're 20, 30 pips in the profit, I have a feeling that it would just turn around and key reversal right up into the thing here. So I would ideally like to see this thing open higher, go higher, and then fail, and put me in then. So just kind of giving you my opinion. You can kind of play it as you see it, but my instinct is you have a double top here, and now you have a key reversal into what looks like to be the new trend to open a path lower. So I don't know if this thing needs a little bit more building away, but I'm going to certainly test this out. And a lot of what I do is probing. Sometimes we're going to get stopped out a couple times before the market falls in our favor, and that's just the way it goes. So I'm inclined to, I like this. We have a double top. We have a key reversal, an outside key reversal where we took out the high and low of the previous thing, in which looks like to be the newly developed trend. So this is, something I like. Typically, I like the key reversals at the top of a channel. So this is at the top, not at the kind of now what it looks to be the bottom. In which case you could get this follow through and then this thrash back up and key revert. So I'm a little bit hesitant, but I think I just got to take this anyways. And I'd really like to see this go higher and then fail first. I don't want to see this thing just continue lower right away, ironically, even though I think this should go down. It's just the way I want to play this. So New Zealand dollar, Canadian dollar, this to me looks like something that I want to get short tonight. So I'm going to put that on the list for now. New Zealand dollar, yen, again, we had so much conflict about, these opposing, key reversals here. You had obviously this key reversal right at the bottom of this channel, which told you that, the downtrend for at least some time was going to be limited, and that at least if you're short to get out, if you're aggressive, maybe you can get long. And, we'll have to see how these yen pairs play out. And probably New Zealand, because it's kind of weaker than the others, is probably less likely to be the one to play, but who knows? I'm going to keep an eye on it. So what was that? New Zealand yen, New Zealand dollar. Kind of had a key reversal here, but we've had several key reversals, but it's, it's just a mess in here. I think we have to be attentive to the one really at the bottom of the channel here, and that's contained certainly this, but what I like to see is if this is a key reversal, I like to see, the energy kind of confirming that. And what's looking like is that this is just getting tired. It's just like it can't follow through. It just looks heavy. And there's a part of me that wants to short this, but then, you know, you've got so much of this price action and noise to get through. It would have to kind of cut through big way. So I think I'm just going to leave that alone, but I don't see any follow through here. But at the same time, you know, it could contain. Just like the Australian thing, we do have a weekly key reversal here at you know, key support area. So is this a double top, or is this the double top up here? So you've kind of got these opposing patterns. I mean, this is a primary downtrend, but again, just like the yen, you know, even though we think this may be a double top here, we have to respect this key reversal, that this has contained the downward action for now. And if this starts rolling over this week then and coming back into here, we can say that, hey, you know, this key reversal is not holding it. But it's difficult. You know, you're going to get some support here, so that going short down here is not likely to be a very entertaining prospect. So, you know, I think I'm just going to leave that alone for now. And we'll just have to, you know, look at that. So moving on, S&P we'll leave alone. Dollar CAD, again, that came off big time from the top. The weakness looks like it was turned around, which we suspected. And now we have this inside day bar here. And this is certainly consistent with what, you know, I would look at to, you know, get in here. And the question is, you know, has it come off pretty fast? And, you know, what's the likelihood of it continuing? But now we have an inside day bar in what looks like to be a very profound, you know, downtrend. And do we play this? And, you know, I think that we could get 80 pips out of this thing, 50, 80, you know, something. Where we have this, you know, inside day bar right here, the high and lows within the thing in, you know, very, you know, now something that's looks like it's going down, and this looks like it could be a continuation. So, you know, you look like you could have the shoulder here, the head here, and then this may come all the way down here before it builds another shoulder, or, you know, this could be interpreted as, so we'll have to see, but this looks like it's, you know, turned big time in a hurry, and we may get another thrust. And then the question is, we've got New Zealand dollar versus Canadian dollar, and then US dollar versus Canadian dollar. You know, both things are very correlated to Canadian dollar. I might send through both. You could choose one or the other. The way I'd play it is take both and just reduce the lot sizes on each position. So I think I might want to take a nibble at dollar Canada short also. But it certainly is a prospect. Okay, dollar Canada, dollar Swiss. Again, this is, you know, something that I thought would turn higher. You know, this has been a kind of a turning thing, and just didn't have anything that I could get at my, you know, didn't have a key reversal inside day bar that I thought, you know, we could have just put a buy stop above these inside day bars, which would have been a way to play this, and missed it, and now it's on its merry way, but we have some, you know, resistance here. So I do think that this is on its merry way, you know, higher and perhaps much higher. We can see now that it's, you know, almost at or near the old, this is where the Swiss National Bank did one of the biggest interventions in FX history. And now we're basically almost, you know, at a level to eclipse that. So it certainly looks like with the dollar trending higher, that eventually dollar Swiss will be a good pair. And it's just a question of, you know, do we, you know, take it now or kind of wait for a better opportunity? And it may, you know, have some trouble right here at this resistance. So we'll have to monitor dollar Swiss, but it's certainly an uptrend there. Dollar yen we've talked about. US dollar we talked about. And now let's get to what I think is almost the trade of the week here again. And we've talked so extensively about gold and the virtues of gold. And I think that all the things that we've talked about are, you know, in place. And Friday's signal was, you know, even more in place. So I think this is probably a trade that we can start February on a pretty good footing again. I've started every month, with a gold trade that's 265 pips or more in the bag on gold. So, we talked about the, the double bottom here, the kind of retracement to the neckline, the cup and handle. So all the technical price action and, price formations have been put in place. And then, I got us out of gold at about the 11:16, on Thursday or Wednesday or whenever it was on that Fed thing. And, I was a little short-sighted, went to a little bit higher, but then it went under 11:10 to 11:08. So probably it wasn't, bad trade to get out, and now it's at or near where we got out again. But, now we have something that I'm really, the reason I got out was, and I think I spoke about this, is that I just didn't see, every time this thing took off, it took off from a close at the middle of the range. And, typically if I have, something that, I think is real solid, I want to see one of these where you have a key reversal, even the small one, to me, where you have confirming price action. And I was always waiting for one of these where you make a new low and now you close at the high in what looks to be like a new, uptrend here. And then I think you kind of have this second, kind of area here where if you cross some of these highs here, you had a retest to this area too. So this was a major kind of trading range here. You broke out from it and then you retested it, and now you closed in the high. So this looks great to me in terms of another thing to come up here somewhere or test this area, or who knows. So this to me looks like a very formidable trade within the arsenal that I look at to isolate a very high probability trading opportunity. So I think of all the trades we're talking about, again, this looks like the way to go. And we may need to thrash about here because we've got this price resistance on the left. So it's going to be one of two things. We're just going to maybe try and pierce the low here, come down, pretty close down here, and then, do one of these, in which case we, put more distance here and more price pinning under here. So it's going to be a question of where you set your stop loss, and I might want to set my stop loss quite a bit away just to allow the thing. I don't think we're going to get under this low at all, and but we might have to endure, some price reaction against us just as a fake out. These things are washing out, and it may go higher and then go lower and then close at the opposite end, which was something we want to see. Or we just come in here and we just do one of these. So we'll have to see. But either way, I think we want to start getting a foothold back in gold. And I think you want to buy it on the buy stop where I'll put my thing, and then if it gets lower or opens lower or goes lower, you may want to start taking a nibble down here, maybe on some buy limits, or watch the price action and start getting in. I would tend to be somewhat aggressive here. So if you guys want to start building a position, taking a little bit higher risk, this is what I'm going to do. When I see something that starts maturing within what I'm looking at, I start really putting it on and making it pay. So gold looks great to me here. Looking at the stock indexes, it looks like the central banks are putting some underpinnings under these asset prices. Gold and oil all did well last week, and the question is is it going to continue? Again, I think these central bankers are really falling over themselves to put, an underpinning under asset prices. We've talked about this major price level at 1800, which is it's supported over and over again in the S&P 500. And for now, it looks like we've held. And now, do we keep climbing this wall of worry, or do we climb up and then roll over? So we'll, have to see how this plays out in the next couple of weeks or so. But for now, I'm going to stay out of that. But it looks like we could get another thrust higher, in the stock indexes as these central bankers intervene to hold up these asset prices. So I think that takes us through the gamut of trades, and we whittled it down to New Zealand, Canada. Let me just take a look at the weekly here. We've got this triple top going on the monthly, the weekly, and so it's a question of, do we come back up here, and still retest here? We could still go 200 pips higher, and it would mean nothing for this thing to fall away. So, again, we just may have to incur a lot of volatility. This looks like a key reversal, but I could see it following through and then following right back up. So this looks like it's the next area of major support at 8,900, which is about 145 pips away. So that's probably going to be an area of support there. So, the risk reward is probably 1-to-1 on this thing, and I do see it falling away, but it could be problematic. I'll probably send it through anyways, just as a way to make 80 or 100 pips. Same with dollar Canada. We could see a quick falling away, but I think there's going to be some near-term support that will come in, and we'll have to see. So this is such a steep up thing. I don't know how much we'll get a fall off. We need a substantial build away even if this were to come down. So I think the Canadian pairs are problematic, as good as they look. They're playable for 50 or 100 pips, but to my mind, the one trade that I see is right here where we're looking at the monthly. Let's drill it down to the weekly. So again, this is not baked in the cake either, but I really love what I'm seeing on the daily, the price action and the technical formation going on there. So let's just drill it down to, again, some of the confusion that I make for myself when you look at all these things. I've been primarily a gold bear for many months or years now. Fell from the 1800 level, and I've been shorting it all the way down and really making a lot of money doing so. So I've been principally guided by these long-term descending wedges in gold. This is a long-term descending wedge triangle pattern, which is inherently very bearish. And when we broke out here and then we broke back here, I wasn't sure whether we were going to bust this thing and come out the other way, in which case it would have, just like the yen, violated a pattern that is pretty much tells you which way it should go, and if it behaves another way, then it becomes what's called a busted pattern, and we always have to be alerted for those. But it did not do it on this attempt, and we came to the neckline, and I shorted this again and made a lot of money going the other way. And now we're turning, and then the first indication on the weekly thing, and I saw this way back when, and I alerted you guys, I don't know if you guys were subscribers back then, to the fact that I saw this weekly reversal. We had now 2 prongs at the 1150 on the weekly, and we held. So kind of a double bottom down here, which is held. We have this neckline right around here again on the weekly, which is even longer term, and we've kind of made a retracement through that and held. And now we could be at least back to a retest of this 1180 area or somewhere thereabouts. And if we start getting a look on the other side, then this could be telling us something else. So right now, this is still a bear pattern that we still have to be alerted for any remarkable failures that may occur along the way. But the shorter term timeframes are telling me that we could get a retest, certainly 30, 40, 50 pips higher, 500 pips higher, sorry. So even if this is we're gonna return to a downtrend, I think we can ring the bell and make some money as it does a retest here. So I think that's a wrap up for all the markets, and I'll turn it over to you and see if you have any questions or any markets you want to look at. I still haven't sent out my signals for Sunday. I usually try and get it out before 2, but like I said, I'm going to give an indication that I think you should send it out put your trades out at, at about 8 p.m. So, but I would like to get my signals out in about an hour or so. I'm going to take your Q&A and try and wrap this up in the next 10 minutes or so. So David has said some things. I don't know, you were saying it looks sideways. I'm not sure what you're talking about, David, which pair you were actually talking about. He says Japanese pound yen looks sideways. I can't tell what it looks like, David. It's in the middle of anything, and it kind of looks sideways to higher. Could really catch a spark here and go much higher. This pound yen, I think, if this yen takes fire and wants to really weaken, these yen pairs can just really go 500 pips in a crack. So I'm waiting for anything that you want to talk about, any chart, any comments. This is our last session. Any questions you have about any of these tutorials, any questions on your mind at all, feel free to ask. This is hopefully we'll do this again in the future, and you're always free to email me at mark@thepatterntrader.com with any questions you have on an ongoing basis. But in these sessions, this will be it for these live sessions, and this is your chance. So again, I'm always on a delay here, so I'm just waiting for any comments, questions, charts that we've looked at, that we haven't looked at, markets we've looked at or haven't looked at. Please, now is your chance. So I'm not really seeing anything coming through. So again, I'm happy to answer anything's on your mind, but if there's nothing that's coming through, it's going to be a wrap for me. So Trent says, any good books regarding patterns? So there's this one website that I'll write here. I think it's called www.thepattern.site. This guy called Bill Kowski talks a lot about patterns, and you can see every conceivable pattern on the planet. Flags, pennants, everything that I talk about, I've just put it in there. It's called thepatternSite.com. Talks about every pattern on the face of the planet. Those are the patterns that I look at, but you can see that I don't just lock myself into a pattern analysis. Patterns bust, and he also talks about busted patterns on that site. But I look at also the price action, and I think this is what makes me pretty unique and authentic, versus anybody that's out there. You can go on a lot of other, websites like mine, like Niall Fuller, has one called Learn to Trade the Market, and he's pretty much a pattern observer. But I think, just knowing patterns in and of themselves is not enough. Sometimes you'll see a lot of false patterns. You'll think a double top is a double top, and an inverted head and shoulders like the Australian New Zealand, and why it is and why I think it isn't. So I look at the price action on top of that, and then I have a third layer, if you will. I look at my insurance day bars, and then a fourth layer where I require the market to confirm all of my analysis. So I think everything is pretty authentic within what I do, and what makes me a little bit more successful than vanilla pattern traders. But I think for you guys looking to keep on bolstering your arsenal, you should do your homework and look at sites like the Pattern Site. And there's just thousands and thousands of. I remember I got like one 1,500-page book that I found in an old trading bookstore once that really got my trading going and really helped me. I was alerted to the descending wedge triangle like the one we're looking at in gold, and I've just made so much money just from this one pattern, this descending wedge triangle. This seems to be my favorite thing when I see it. It's a little problematic because sometimes you get these false breakouts under here. You think it's ready to go, and then it turns right back in. So they can be pretty problematic, but when it goes, I know when it's ready to go, and I've made a tremendous amount of money just on one pattern. So I'd really advise all of you guys to shore up your knowledge on patterns and then take what you've kind of learned from me, not to be arrogant, but I think finding these key reversals, these inside day bars, using the market to confirm your thinking is all what has made me incrementally successful over the years consistently. Liz says, interesting 2 weeks. Thank you, Mark and Peter. You're welcome, Liz. Trent says, thanks. Zafar says he has a book as well. If you want to share that, Zafar, let me know. So what other things do you suggest to keep improving? Trent says, so really risk management. Everyone focuses on how much they're looking to make in the market. And, at the end of the day, I think what distinguishes great traders is their ability, in the risk management area. And then sometimes knowing when to really press it on one trade. So, I talk about taking 0.5% risk in the main, which is what I do. But when I see something like gold, I then press it, and I'll take like up to a 2% risk if I really like something. So, that's what really torques my return. Sometimes I'm making 20% a month, and I'm not always doing it taking a 0.5% risk. So I just kind of know in my water when something's really a good trade versus when I'm just probing the market. And, again, most of the times I'm just probing the things, NZD CAD, I'll probe it, I'll put a tester, I'll try and make 80, 100 pips here and there. But it's, I know that it also can go against me, and, I'll take my 0.5% risk, and, if I get stopped out, so be it. But it's really, so Zafar has talked about this thing on Amazon. I don't know if everyone can see it in this chat box. Again, it's Thomas Bulkowski. There's a great guy, Van Tharp. There's a book called Trade Your Way to Financial Freedom. I'm looking at it on my bookshelf right now by, let's see what his full author name is, Van K. Tharp. So it's, Van Tharp. I would just Google him, and he talks a lot about money management. And that's really where you guys need to focus also. It's not about identifying trades that are going to make a lot of money. It's how to manage your risk in, most of the times where you can't make any money more. I say it to my clients that I can only be as good as the market environment will allow me. And, if trades are extending and I get in and it goes from one level to the other, like gold, we made, 265 pips. It just went from one level to the other. Last month I shorted 1152 and I stayed in it for 6 days and got out 1109. And those are the what I look for. But sometimes there's no volatility, there's no follow through. The summer periods, they're just, certain periods where the market's doing nothing. And that's where you'll lose everything, quite frankly. And no strategy is going to work out very well. And that's where you need to work on discipline and, mental preparedness and risk management. And so that's what nobody talks about as in all of these trading things. Everyone, every trade signal, every EA talks about these unlimited, profit making, kind of things. But the reality is the markets and the environment and trading doesn't work that way. And that's why most people lose, because they just mentally, and it's really the 6 inches between the ears, it's the mental and emotional component that does everybody in. So the idea of this whole 2-week thing was how to, whittle things down to the most high probability trades, eliminate, where to stay out of problem areas, and then a lot of things that we kind of didn't focus on, which is the risk management component. And maybe I'll, open up another course and devote, much more to that, because that's frankly where you're all going to go wrong. No matter what, we looked at here, you're going to run into periods of just psychological distress where, can you handle, periods like this where, it's just going wrong and wrong and wrong, where, we took 10 bad trades in a row. And this looks really, really bad right here if we just look at that in a vacuum. But at the end of the day, this was the result. And so, can you do that? Can you take 10 bad trades in a row and come out with 653 pips for the month? And I think that's really what distinguishes me from, everybody else. But it's not for everybody. And, once people see 10 trades in a row, they start writing you off as, just another person out there, and that's it. But I know this is what I've done, time and time again. And every month it looks ugly, and sometimes I'll take 10 bad trades in the beginning of the month, and then you fret about what it's going to look like by the end of the month. And I've had, I think, 12 winning trades, winning months in a row. So I must be doing something right along the way. So anyhow, Trent says, awesome, thanks. You're welcome, Trent. You're a great guy. You always have good comments and supportive, and I appreciate that. Jeff says, great learning. You're welcome, Jeff. So anything else? Any other comments, questions, markets, commodities, soybeans, whatever you want to talk about, we can talk about now, and then I'm going to wrap it up. Okay, guys, it's been an awesome 2 weeks. Thank you for making the commitment to be here. It's been great for me, and I look forward to seeing you on the inside. And Anisha, welcome. If you have any emails, any questions, you can always just email me, and I'll, send you back a personal response. So thank you again. Thanks, Trent. I appreciate that. Naveed says a great job. So does Trent. So does Sergey. HP, John. All right, thank you guys. It's been a gas for me also, and I'll be talking to you all, I'm sure, along the way. Bye-bye now.